Today, we will talk about execution in the financial market, the types of orders and examples. Let's learn what is execution, types of orders, and examples. Execution is the completion of a buy or sell order for a security. It occurs when the order gets filled and is not when the investor places it. When the investor submits the trade, it is sent to a broker, who then determines the best way for it to be executed. Brokers are obligated by law to give investors the best execution possible. The Securities and Exchange Commission requires brokers to report the quality of their executions, and costs have been significantly reduced due to the growth of online brokers. If the order is a market order, then the chances that it will be settled at the desired price are high, but there might be instances where execution risk is introduced into the system, especially in the case of a large order that is broken down into several small orders. By law, brokers are obligated to give each of their investors the best possible order execution. However, debate exists over whether brokers are routing orders for best execution. The SEC has put measures in place to ensure that investors get the best execution by forcing brokers to report the quality of executions. The SEC also requires broker-dealers to notify their customers if their orders are not routed for best execution. Dark pools are private forums to help institutional investors execute large orders without disclosing quantity. They offer execution at the midpoint of the bid and ask price. Dark pools are generally used by institutions and offer liquidity to execute a block trade at a better price than on a public exchange. Main Street is generally skeptical of dark pools due to their lack of transparency and lack of access to retail investors. An example of execution is when a broker finds the best possible execution price for a stock for the client. For example, Olga enters an order to sell 500 shares of stock ABC for $25. Her broker finds the best execution internally at a price of $25.50, resulting in a net profit of $125 for Olga. Here are 3 key takeaways. 1. Execution refers to filling a buy or sell order in the market, subject to conditions placed on the order by the end client. 2. There are several ways to execute a trade, and they encompass manual as well as automated methods. 3. Brokers are required by law to find the best possible means to execute a client's trade. Hope this would help. Thanks for watching.